Father, we thank you for this session. Thank you for the opportunity to come again. All right, we go before in your guidance. Our hearts and our minds are open to learn. Yes, we improve. We increase in our understanding and insights to trading. We set the right discipline. We are blessed with abundance. Money comes to us in measures. Yes, as we expose ourselves to a true form of learning. Yes, and we duplicate ourselves in our results. We are joyful, we're happy because we're seeing the fruits of our discipline. It's a beautiful week. Thank you for the experiences of the week. As we get into a new form of learning, we grow. In Jesus' name, amen. See, my feeling is like a trend of, okay, good. So let me just quickly do this. All right, something is waiting for us in the market, but let me quickly do this. So I want to focus on, so practically, all right, gold kept us in a trap. Closing and buying, you can see all through, gold kept us in a trap. Okay, yes. Well, look at this day. This day broke above. I think this was the day. This was the day we bought gold. Okay, paid us some money, came back. All right, for this particular, what date is? Hold on. This was February 20. Okay, hold on. This is February 10. Today is, so we'll go back. So I know I called gold, but I want to just focus on, many of you are not typing gold. Many of you typed S&P 500. So I want to focus on S&P 500. Okay, because from this you can see something. Okay, what date is this? Many of you are focused on the signals. I need you guys to focus off the signals off your account. All right, and set a, with the result and document, you will know what to do. All right, with your trading the next week. If you do not have the result to know what to do, you would always be having the experiences of what you were doing. All right, so you may not have all of the beautiful experience. So this was on the 6th. Monday was what? Monday was 9. All right, good. So this was on the 9th. All right, what experience was this? Okay, this was, I'll tell you. All right, on Monday, I'm just doing this so that you guys see the plane of things, because I do this as market insight. And I'll tell you, before I'm going to trade, I would want the market to change car. So this, if we're looking at this trade right now, okay, this is a trade that probably, depending on how you enter, okay, this was the break of the structure. Okay, if you're going to enter, this is where I'll call the trade. This is not a good trade. It didn't hit and move back. I had a lesson on this trade. All right, it didn't hit and it moved back. Okay, this was supposed to be the risk. I'm not sure it hit. Did it hit? All right, it didn't. It pulled back. Okay, this trade was painful. Okay, it pulled back and broke above. Okay, and guess what? It didn't hit as well. So this was a lesson trade on S&P 500, because why? The moment it broke, if you entered, okay, this will be your risk. This didn't serve that. This market has been consolidating, okay, since then. The next day, okay, it did the same thing, closed above, short, closed below, okay, at the below. This is what happened. So S&P 500 has been dramatic, okay, has been not good this week. The only time he played well, all right, was one trade. I think it was only one trade that he broke. It was a trap. Was it which day? This day didn't pay as well. It was only this day that actually paid. Okay, which was yesterday. But before he did that, yesterday was the only one that paid. But before he did yesterday, guess what he did? He broke above. All right, and there was a break even. Now, this is really what I want to send. So there was a loss. There was a loss. What was your loss? So 2 days was a loss. Be honest on this chart right now. You're trading, and what was your loss? What percentage did you lose on S&P 500 this week? Everybody on the chart. This is an accountability call. I just did. This is from Monday to today. This is Friday. Okay. We've had, this was this was a loss. Okay, good. We had the loss. If there was a trade, I said I was going to sell. And guess what? It sold. All right. And it took us out. This was a loss. Okay. That is when it broke. No, we didn't take this trade till this one. Yeah, this was a loss. So this was a loss. We didn't take a trade here. We took a trade here. Okay. Because it broke below. All right. It didn't quite move. It took this out and came. It was a bad trade. This was a loss. So 2 complete loss. Am I correct? Is it 2 days loss, right? If I'm correct, you guys let me know. Then yesterday there was a break even because this was valid, rejected, break even. Okay. So yesterday was not. That is to the scale of document. All right. Now, what was your experience? So let's say 3 days activity trading S&P 500. What was your loss? All right. Okay. Some of you are saying 9% loss. Okay. Sorry. Mr. Giles said 1.4%. Okay. 2%. 4 point. That's almost, let's say approximately like 5%. 0.8%. I didn't take the one that you went up. All right, good. So for S&P 500, I need you guys to see something right now. So you had $1,000, okay, and you lost $50. Are you worried? If this is what you guys are losing, then you are in good spirit. Okay, you had a $10,000 account and you lost $500. That's 5%, right? You had a $100,000 account and you lost $5,000. Is it worrisome? So 50% is the highest here. Okay, 5% is the highest. Now the question I would ask, okay, so okay, so that's around 5%. It means you're using the two, you exhausted the 2 year, you exhausted the 2 year. That's fine. All right. What I'm trying to say is in the scale of this week, if you're following a proper risk, if you lost more than 5%, you're doing something that is not in line with what I have helped you to know. Am I correct? Is it okay to say that? Is it okay to say that? If you only lost 5%, you are in line with your losses. Now, many of you would have lost more than 5%. All right. And the reason would be you are not only trading this currency, you traded other currency that also hit a loss. Am I correct? In one account. So you don't have a track record of portfolio growth. All right. You just have a portfolio that takes records of trades. You're not the one recording the trade, the account is recording you. This is widely the experiences of bad trading. So if I lost, now imagine, if I lost, I only lose in a portfolio. What other trades would you call? Practically S&P 500 German. So in this, it has only been one good move, which means if you had an index account and you're not trading multiple indices, you're trading one index, it's probably one bad experience. One, you had one loss, 5%. Okay. But if we traded GU and GU was a bad week, and we traded S&P 500, everybody was bad this week, guess what? You're going to have total losses. If you're trading a funded account, you may have blown your funded account. Or if you're trading a live account, probably lose more than 10%. Because apparently, if you're trading multiple accounts, this is what happens in your account. This is one thing I need you guys to know, okay? Maybe you guys are not seeing it from the perspective that I say it. But if you are multiple if you have multiple experiences, like multiple accounts, you may not follow proper. It will not be ideal. It is not sellable to you to follow proper risk management. Kenry, what do you mean? So let's say you have a $500 account. You're not trading a prop firm. You have a $500 account. And in the scale of a trading account, you're supposed to use 2% of your trading equity, all right, in a particular account, in a particular day. All right. That is how much? Ideally, you guys type it on chat. So let's even say you're doing 3%. All right, what's that? 3% is how much? $15. Is that $15? It's $15, right? Beautiful. $15 in a $500 account. And you are trading multiple currencies. How do you want to divide? I gave you GU, it is 50 pips. All right. So you have to say, oh, let me break this down to, and this is what many people don't do. They just pick a lot size rather than pick the risk. Now, even when you pick the risk, you reduce. So for indices, $500 will not work. Okay, because contracts around $500 start from, all right, one, and that is a mini oriented. It means an average trade of $100 would not ideally pay. Hence, you would take the trade because that is what we take. That's what we call. You would take the trade, okay, and you will use one, and you're risked up to 10%, 15% sometimes on indices. If you have a size of account like that, indices will not pay you. But because of your size of account and your discipline in practice, it's okay. It's always working. They've been sending results. You will take it. It means you're not using proper risk. And not only did you take that trade, so if you're just taking that trade, it will be good. You are not taking other trades in one account. At the end of the day, a bad week might lose you over 50% of your account. A bad week, not a bad day. Because if you do a bad day practice and it's compound, a bad week compound, you may lose 50% of your account and you will be feeling bad, dealing with your feeling bad, not because the market was bad enough to make you feel bad. Your practice accommodated activity that is making you feel bad. Because if you only follow the plan, 5%, $15 out of it, you won't feel it. There's none of you that will feel it. It is your practice that you are feeling, your inability to stay disciplined, follow instructions, be reserved in your pursuit of money, your interest to follow the ways of hype, and it's not working out. That is what you're feeling, because I don't see you losing 10% and even feel bad. 10% of $100 is $10. 10% of $1,000 is $100. 10% of $10,000 is $1,000. You still have $9,000. Okay, that is if it's your real equity. Now, the problem, what a lot of you people do is even worse when you are trading a live funded account that has a margin call and you're still doing this. It's better to do this practice on a live account than even to do it on a funded account, because a funded account hibernates, all right, or expands your risk. You get it. $100,000 account, whether an evaluation or a funded life, okay, for some experience, let's just say 10% of that. That's what you're supposed to lose. It means you're trading $10,000. Okay, if you punch on your risk 1%, 1%, okay, is $1,000. But that's actually 10% of your risk as a funded trader. So there is a practice, a decision you guys have to make. In the phase of trying to document and discipline, your risk in a funded account should not be the same risk in a live account. You have to trade your live account, okay, based on the risk they give to you. If you want to be safe in emotion, all right, Because this is a practice. I told you 6 months, you are practicing how you can do 10%. It means you have to explore approach. Some of you, the approach you are exploring right now is still the same approach of what has been making you lose money. So if I have 100K, I'm not really good right now. I'm trying to test myself and my result. 100K means I have $10,000 risk. So let me start off by risking for $10,000. It means for every trade I take, I'm risking the account like I'm trading $10,000. Do you know what that will do? It will reduce. You make less money. So if we have a good month, all right, and you traded $100,000 for $100,000, you may have done good amount of money, all right. But if you have a bad month, you would have lost a bad amount of money. But if you traded it like 10,000, if we have a good month, yes, you made a sub amount of money. Okay, Cambry, what are you saying? Explain it in numbers. So we just had 5% loss. Okay, in I'm assuming now you're trading S&P 500 and there's a 5% loss on S&P 500. 5% loss, $5,000 if you use the risk for, and you've actually what? You've gone down 50% of your risk. Because why? $100,000 evaluation of funded account is not supposed to lose 10%. It means your margin is $10,000. You just lost $5,000 in 1 week. Nothing will not make you be reckless. Am I correct? You will be reckless. You will be emotional. You will be fearsome. You will be all out there. Because why? You're not seeing the $100,000 anymore. You are seeing that you are close. You are halfway gone your risk. Am I correct? Are you guys with me on the call right now? So your troubles, it's not, it's internal. You're fighting the fact I'm 5% gone out of my risk. You're on a drawdown of 5%. Many of you understand the language of drawdown. Okay. If you lost 5%, that's drawdown off. It means you only have 5% to blow $100,000 account. That is when it falls on the bad side. But if it falls on the good side, boom! Oh, I'm almost passing my account. You'll be happy and excited. These are the circles people go through. But you see somebody that is going to be different. If you traded the account like $10,000, this is the price of discipline compared to gambling. Or is it gambling? Or maybe let me use the word hype trading. You traded the 100K account like a 10K account. Okay. If our wins are overall, this is one of the things you guys don't put into consideration. If our wins are overall, out of every 100 trades, we'll win 65 or win 70. But there is 35 trades that can lose. And that may be 2 weeks of losses. You can actually blow your account before you experience the 70. Or what will happen is, okay, you are back and forth. All right. You will not experience the win because you did not trade the overall. You fell out because of your risk application. So what you do, if there is an overall, give your account a room to experience the overall so that you can see how much you made and how much you lost. If you fall on the wayside, you did not get the complete result. Okay. So imagine you traded a 100K account like a 10K, like the risk was given to you 10K. Sorry. Just let me drop a message. You guys follow what I'm saying. I'm saying it slowly, but I want you guys to get it. Okay. So what will happen is, what risk are you going to use? You are now going to use 2%. So it will be 5% of $10,000. You would have lost $500 out of a $100,000 account. If you lost $500, how much have you really lost in your evaluation? Talk to me in the chat. You just lost 0.5% in your scale of evaluation. And if you made money, you just made 0.5%. Is it slow? Yes, it is slow. When I did that 2026 blueprint, how long did I tell you that you would do 10%? How many months? No, I gave you guys 2 months. I say you take 2 months to pass. You guys should pay attention to details. I may be in a hurry just dropping this value, but you guys should really pay attention to the detail. I said 1 year to get 100, but I broke it down into details. You take 2 months, you get 100K, you take 2 months to pass. That is after you've learned a strategy that works to do 10%. Give yourself 2 months. Do you know what I've done? In the detail, I want you to under leverage and do it. So even if it takes 3 months, do you know 100K, 3 months, you do 10%, you're getting paid like $7,000 in three. It means you made 3,500, 3,000, like 25, 25, 25. Is that good enough income for an investment of $500? It means you invested $500 3 months ago, and 3 months later, you're making $2,500. Is that good investment? But because you guys are in the hype race, you're seeing 100K, you're seeing 10%, $10,000, and you're approaching it to get it now. You're not forgetting the fact that you are against two things: your ability to trade and your ability to manage losses. Your ability to trade for profit and your ability to manage losses. If you do not have the ability to manage losses, you will not trade to get profit. Your biggest adversary is not in your the ability to earn profit is easy, but the ability to manage losses is hard. You guys are not focusing on that. You're just focusing on passing the account, growing. But losing is your best ally. Know how to lose. So lose slowly. For you to do that, you have to give up earning fastly. Now imagine a month, you're just losing 5% of your risk, not your capital. Guess what will happen to you over time? Now, if you're doing 0.5% and you're averaging 0.5%, okay, how long will it take you to lose that account? If you have a bad 4 months, 0.5 before you get to 10%. If you're losing 0.5 every week, before you get to 10%, it means you have a bad 4 months. Will that happen? No, it won't. But if you have a good, all right, 3 months of concern, if you're doing well, even if it's 7%, even if it's 5% you did in profit, you will be another type of trader. Not many traders hit a 1K monthly. Okay? Not many traders hit a 5K monthly. But if you're someone who's earning $500, $1,000, you're growing. You're having a foundation to now fund more account. You cannot begin to compound. Okay? Within a year, you would have scaled the account. Don't think of your year now, what you're getting now. Think of if you can get it right, you're slowly growing. Even if it's every 4 months, I can make 5%. It's not the money, it's how you can compound. If you have 100K ability account and you are able to pass it or get to pass it in 4 months, and another 4 months you're able to do 10%, it means in 8 months, all right, you're able to make about $8,000. If you break it down into monthly pieces, that's $1,000 a month. My friend, you're not losing. You didn't lose time, you made money. But most importantly, if you could do that in 8 months, you only made 10% in 8 months. Some of you you've not made money in trading in 3 years. You are just giving to the market, you've never taken. So when you say 8 months, some of you frown at the idea, but you've never made money really in trading. Okay. So imagine you did that in 8 months. Now duplicate it again. You have 100K. Okay. It took another 8 months. All right. Now it won't take 8 months because now you're on live. It means 4 months you did another 10%. All right. That is another 8K farm. $8,000. Do you know with the first 8K or 7K, do you know how many accounts you would have purchased to compound to this? You can save $4,000 and invest $4,000 again. You probably have more than $300,000 account. And it took you another 4 months to do 10%. That's 20-something thousand dollars. This is the journey many of you are not picturing on. You're just focusing on the now. Grow slow. You will not feel the effect of a loss. Because for every time you feel the effect of a loss, you'll be making mad and rash decisions in your trading. Trust me. And that's where the bottleneck comes in. Did that make sense this morning? You would have SAR trading. Manage your trading account. We call many currencies, but if you have this account size, just trade one. Trade. If it's GU, your account can trade GU. If you have the account for indices, trade indices. Some of you have no business trading indices with the type of account you have. Just because the availability there doesn't mean you should take it. Can you grow it? Can you take the losses? Okay. For those of you that have registered 10 trade, now I'll go deep a bit into brokers. Maybe this session more should manage you. For those of you that have 10 trade, let me give you an idea of how to treat your broker. So if you have 10 trade account, don't use any account, live account, that is less than $3,000 to trade indices, US 30 and German 30, live account. Because what you'll be doing is gambling. Are you guys with me? I mean, like, so you decide to use your money to trade live account. Anything less than $5,000 is gambling. Because why? Indices is a mini contract. 100 pips is $100. $100 is 1% of $10,000 account. And sometimes indices go as far as 250. So 250 in pips for one trade. Now imagine you're trading both sides. That is a commitment. Averagely, indices is between 500 pips in a day in commitment if you go both ways. Okay? It means if you lose a day, you lose $500. The two trade that loss, you lost $500. It means you lost 5%. If you have a $10,000 live account, which is more than the giveable amount to trade in a day, you shouldn't risk more than 2%. $10,000 live indices. Many of you just jump into trading without really listening to details. Maybe, okay, maybe we don't call the details, but I talk about risk. You shouldn't lose. So I say you shouldn't lose more than 2%. But some of you don't really know how to understand what 2% is. You just get into trading. Okay, so now I'm giving you guys, so you guys can take this video as a reference point as to broker account. Many of you ask, what is the size of, from the risk, you should already know the size. If you're not knowing the size, it means you're not paying attention to the risk. Okay, so if I have to lose 2% and I want to trade indices, averagely, the account size that you have is $20,000. Live account. If I want to go with that 2% in a day, put 100 if you got that. That's if I want to be trading indices. Likewise, gold. Indices gold, because gold right now is $100, 100 pips. So 2%, $200, that 2%, $200, that's 2% of, that's 2% of $10,000 is $200. Okay, that's $10,000, sorry. That's 2%. That's in one trade, $10,000. Ideally, that's what you ought to be using. if you have a $10,000 account. So if you don't have it, that answers the question. What's the size? What's the account size to use for a gold? If you want to follow proper risk management and the style of account growth, I'm telling you, $10,000 is the live account to trade gold. Because if you make money, all right, 2% a day, you make $200. So if you're doing that, you could grow well without jumping, okay, losing too much. Now, Kenry, that's a lot of money. I don't have it. What is the way around it? If you now say, okay, I want to scale, I don't have $10,000, but I have $1,000. I want to trade gold. This is where you now go get a 30K account. With $1,000, you can get a 30K account, and that could averagely trade gold with proper risk. A 30K account can trade gold. A 30K account can trade indices. Because what? With the plan I just told you, with a 30K account, you have access to what is 7%. So in my broker is 7% of 30K. What's that? This is even normally it's supposed to be more than that, but I want to go with it's 2,100. All right. 2,100. It means your risk in that account is 2,100. Okay. Now, in this scale, if you have to trade the account like you're trading 2,100, okay, based on what I just explained earlier, you have to now trade the account like you're trading 2,100. If you use, I think I really need to be saying this more often, all right, to help people who don't really have account guidance so they know the risk they are going, the risk they are taking. Okay. So if you're trading the account, because it's a funded account and it's a live account. Now, this is not an evaluation, it's a live account. It means 2,100, you cannot lose more than 2,100 in a month. If you do that, you blow the account. You cannot lose more than, I think 6% is 1,800, all right, within a given day. Okay, now, how do you get into that under leverage scale I just talked about? You don't have to use 2% because 2% of $2,100 is how much? What's 2%? Okay, what's 2% of $2,100? So this is where $40. It means it will not work on gold because gold, it means you have to be finding trades on that is less than 50 pips. We don't determine what the risk will be. If you are doing that, you'll be Methuselah. You will not see trades. You have to go find a different type of strategy. Maybe all this SM. Are you guys following me so far? All right, let me know in the chat. I'm giving you guys a guidance, a reality that you guys should pay attention to. So for every decision you make, you're going to know how to apportion decisions. Okay. So what do you have to do? So Kenry, what's the solution to this? Kenry is using the yardstick of 2% majorly for a live account that is not limited. Now you are limited by risk because of a funded account. What do? You don't have to risk 2%. You can go risk 0.05%, divide it into 0. So now 0.05%, all right? You reduce your risk. But now in this case, it means if you're doing that if you do 2% is $40. Am I correct? Now, this is where I want to match it. If you do 2%, it means it will not work on gold. I'm not making a mistake. It will not work on gold, okay? Because what you're doing is you will not find trades on $40. All right. If you reduce it to 0.05%, what would be 0.05%? So the lot size, okay, now I've not talked about lot size. Let's hold on a bit. Okay, I've talked about it because 0.01 on 100 piece. So I'm using 100 piece. Averagely, you're going to be losing $100. And nobody can afford to lose $100 in if you're trading the risk of. So there's nothing you can even do about this. You're trading the risk of. You're trading the account like a 2,000 uh 100, it means you cannot trade gold. Okay, now you have to scale up. You can only trade one trade. This is the only solution. You can only trade one trade in a day, because now you have to scale up to about 4% or 5%. Okay, which in turn, if it's 5%, that's $500. $500 in the scale of 30K, it's also marginable. Okay, but one trade will be your approach. So this trading this will not work, even at 30K account. This is why, except you want to remove that layer of Kenry, let me go the risk. I'm not trading like a my risk. I want to trade like the whole account. So okay, use 1%. So 1%, all right, is 100 pips. So 2%, $200. If you lose $200 in a trading 30K account, okay, that's fine. It could, all right. That may suffice, but you know that you cannot go beyond. You cannot trade this account like it's 2,100 because it will not work on gold. So you are trading like in a scale, but you now have to be very, very careful. You can't trade multiple trades. You shouldn't lose more than $200. It means what you have to be watching for in a trade is the risk. If it's above 20 pips, which is $200 in gold, all right, that trade is not for you. If you can follow this plan, you can never lose your account. Are you guys seeing? I'm exposing all of the bottlenecks, the things people don't look. Are you guys seeing it? Are you guys appreciating that I'm telling you all of these details? Because you guys don't pay attention to all of these. You just want to make money. And you don't end up making the money because why? You don't pay attention to these bottlenecks. Live account has advantages, but people do not have the advantages of live account because they don't have equity. Live account has advantages, but you have to have equity, okay, to be able to. I just told you guys, because people ask, what size of account following this risk should I have? I just told you should have 10K live account. You don't have that. So now you have to go the route of leveraging what you have, but you now have to apply a certain risk and a certain discipline. So I'm showing you guys that certain risk. If you have to trade gold, it is not ideal to even trade gold at all in a 10K funded account. Okay, because why? It only exposes, it means you're overexposed. Can you do it? Yes. But from the perspective of I want to do this thing Cambridge talking about, let me get in this journey. But if you just want to do it as a trader, it's absolutely ideal. I have students who are trading with it with even a 1K account, but one trade, they buy another account. Okay, they know. But if you're not that kind of person, scale, do the funded account. I'm talking gold. I'm talking in each currency. So gold and indices goes together. Okay. It means this idea of both sides, you'll be committing it's because if it's 100 pips, you can trade both sides. But if the trade is more than, so you only have 200 pips in a day. If you're trading a 30K account, 200 pips. Everybody write 200 pips for gold. That's how you can manage a good trading discipline. So I'm saying it's on gold because why? You don't want paying attention to gold and indices because that is where my focus is. You guys will be making money on gold, but I don't want you guys to be gambling. Don't dabble in and see too much money and be excited and see too much money in losses and have had failure. 200 pips should be your margin for every day. So you're looking for 200 pips risk. So if you see a trade that gives you 100 pips in one side, wow, that's beautiful. It means you risk $100. $100 out of 30K, that's good. That's cool. In a day. Even if you lose 5 days, that's $500. That's okay. You'll come back. Now, if you go the days that you go 1 to 3, you gain. There is no 1 to 3 in losses, but there's 1 to 3 in gain. You will gain when you can have. So this stipulation, this should be program yourself this way. It will help you in the journey of what I just explained. Don't lose too much. Leverage what is workable for the currency. So that's gold, that's indices. What I just gave you should work on indices. 200 pips. Max. So if a trade comes out and the trade is more than 230 pips, what do you do, Kenry? Listen to this. You only have to take one side. So let's say one trade comes and one risk is 200 pips or maybe between 200 and 250. Only one side. If the other side goes, you've lost that day. Am I making sense? All right. One pip on gold is not $100. It is actually, so 10 pips in Forex, when you measure pips, okay, and you see 10 pips, 10 pips Forex is 100 pips gold. 100 pips gold is $100. Okay. It was 100 pips, $10 a couple of weeks ago. It just changed. And they said it's across brokers. With a 0.01, 100 pips is $100 now. Yeah. That's why I'm giving you the pips. It's the pips that determines your risk management. Okay? See, it's not even about the broker. Whatsoever comes your way, know how to manage it. So I'm just giving you guys a yardstick of management for indices and gold. Now, Kenry, I don't have an account of 30K. I can only get 10K. The currencies you can trade on 10K, S&P 500 and currency pair. S&P 500 has a micro lot contract. German 30, US 30, NAS, they have a mini lot contract. So it's standard one, but the contract is mini. For every pip, it's $1. But for S&P 500, for every 10 pips, it's $1. 100 pips is $10. So that currency gives you access to indices with low leverage, S&P 500. I'm talking my broker because many of you, okay, you're coming into 10 trade right now. So I'm giving you guys a management system in 10 trade based on the contract. I don't know what, and this is another thing I said. You see now, because you're trading leverage that I know, I can guide you. If you're trading a leverage I don't know, I can't guide you. So many of you, I don't know what your broker is right now. You may be lost. Am I communicating? Because there's no way I can guide you on your broker because I don't know what your broker is. Hence, it's always ideal for you to have a manageable growth system. Use the brokers that is in sight. So for those of you who are using your own broker, congratulations. Okay, I've given you a system of broker for you guys to follow. All right. So if you're asking broker related, I may not be able to serve you because why? I do not know your contract. But for those who are using mine and can manage, I can help you with managing because you're using this. Am I making sense? Say, can you use 3K on S&P 500? You mean live account or funded account? That's $3,000 live account on S&P 500. So this is what every one of you should do. How do you scale risk compared to account? So just calculate what is 2% of $3,000. So this is the format, $60. Okay, good. So 100 pips is what? An S&P 500 is what? $10. All right. So you can trade it. You can even trade 100 pieces, $10. You can trade even in 1K account with S&P 500. And you still have that risk margin in S&P 500. Do you understand? Is this getting beautiful now? So S&P 500 is a loophole in indices. All right, it's a loophole because of the risk and they move alike. So someone may be making $100 on US 30, okay, and it's making $10. All right, in S&P 5 for the same 100 pips. Okay, but for the thing there is the pip count on S&P 500 is longer than German 30. So if you're measuring a move on S&P 500 it's come speedy than. So you can have 50 pips, and that 50 pips is probably 100 pips on S&P 500. I think somehow that is why they reduce the leverage. Okay. So because I do know that if I'm taking US 30, if I'm making $300, I'm making about $100. Like divided by 3, I'm making about $100 in the same pip count with in the same move count with S&P 500. Do you guys get the drift? So if you have a 10K account unfunded, you could trade S&P 500, you could trade currency. Okay, focus on GJ, focus on GU. These ones can manage because the risk is fair. But for indices, it is not ideal, 10K. 10K is not ideal. All right. If you want to trade, the only indices you can trade is S&P 500. Is it clear for everyone now? Is there any question around this area you guys want to ask? Okay. Even a 1K can trade S&P 500. Is it very clear now? So this is, do your due diligence. Know a portfolio. You don't have to trade up pair. Your money restricts your trading. Your money determines your trading. Okay? Your money determines your trading. And if you feel you don't want to miss out, open accounts for every. Right? Open an account for every currency you trade. All right? And you don't have to go hyper. The money you want to make today, you will make it tomorrow if you trade well today. You don't have to make it today. All right? Because you have to also fight your journey of frustration. If there are no questions, I want to move into the market. All right? Today is Friday. Today is Friday. Many of you have lost your week loss. You don't even have to trade today. Okay. So let me, hold on, guys. Let me stop that recording. So it will be good. We just title it management. Money